Hi, thanks for tuning in. This is a weekend review for the week ending November 18th, 2022. We're looking at a daily chart of the S&P 500. Not a lot happened this week. As you can see, there were basically 5 inside days relative to last Friday's close. And that tends to be what happens during opex week. The third Friday of every month is when the weekly options expire. And you know what they say, like 99% of those expire worthless. So you really just have, if you look at this range, right, price got above and below, and that was it. 400 to 393, that was the range, and it stayed there all day. And now that you see this is a bull flag pattern. That's what this is. It's a bull flag. Now, what is the risk of a bull flag? Is that price can actually come down and test the low of 373 if this bull flag fails. Now, the second thing I want to point out in this chart, and this is with after hours on, we'll take those off. Second thing we can point out as we zoom in here is we're still in an ascending channel. And what you want to do while you're in this channel is buy towards the bottom and sell towards the top. That's it. If you look at this pattern, this is a bull flag pattern below the 200. So what I can say and what I will say is this is building energy to get above the 200. And as long as she's in this channel, there's no reason to be looking for lower prices, right? It's the same thing that was true when she was in this channel. There was no reason to be looking for higher prices. So you see what happens with the market, especially when it's range bound, right? We can come look at this period where going back to June 17th and going back to August 16th, price has just been stuck between this two high and lows. All right, and while in this range, you want to buy at the extremes and sell at the extremes. We're not at the extremes yet. This is the sell zone. Take a look at the weekly. Still held the 200. And again, people want to say, hey, this looks like this looks like this. Maybe, maybe not. Right now we have positive momentum divergence, and you have price sitting at the 20. Here it was extended from the 20. We're sitting at the 20 in a series of higher lows and higher highs on the weekly. And when you zoom out to the monthly, you've got this blue line, which is the 50, and price has been at the 50 now just a few times going back a decade. So you tend to get the best entries at this level. And if things are going to get really bad, they'll break below this level, and something like this will come into play. But we're not there yet. In fact, you have now, this is month 3 of the histogram curling back up. Just like you have the histogram here curling down at the top, which signaled a pending reversal. You have the histogram here curling up. Let's throw the ball around the horn and take a look at the 4 majors. QQQ monthly, TD9 monthly buy setup, PPO back at 0, at the 50, at the 200, building energy. This is technically a bear flag, and just the opposite of the chart we were just looking at. She can't get above the 20. And you zoom into the daily, this channel that she's in is much, much weaker. And you can tell that by the slope of the channel. That being said, this is a bull flag pattern. Same pattern you saw, right? And going back to last Friday's close, price was inside all week long. That's what happens during opex. Keep throwing the ball around the horn and you'll see the same story, except over here at IWM, which was a hell of a lot weaker. This at November 11 range did not hold at all. And you saw this bull flagpole pattern start to fail. And it starts to bring into question what pattern do you have here? Again, 1, 2, 3 from the top, 1 up. You could easily see 3 and put this all the way back down here. Turn after hours off. She's already hit the low from November 10. Already hit the low and came into the window. So 178 is certainly on the table. And again, still in this ascending channel by the dip as you get towards the bottom of the range. And momentum here was its highest on this most recent pull. And that is the same with all of the charts that we've been looking at. We don't have a bearish divergence on the daily. And I know people want to see a divergence. I'm not saying statistically it matters. I don't think statistically they do. But people love to see divergences. And you look at now the strongest of the majors, measured by momentum being at 4, breaking this high here, higher momentum, no divergence. Again, remember, no divergence. If anything, an expanding pattern that could continue higher. And what you have is really just a pullback. And if you look at the slope of this one, you could certainly do it like this. You could lower this down to here, go like that. It's all very subjective, but the basic idea is she's still even above this super steep trend line. This is definitely the strongest of them. Above the 20, the 20 is curling up, 510 bull cross. Going back to the beginning here, did the whole 61.8% retrace. Again, this is my subjective analysis now. You'd see a little left shoulder ahead, right shoulder. Certainly possible. Again, already put in the weekly higher low at 180. So any pullback to really 190, the 200, the 10 is for buying. And this is the strongest index. And the leader within that index is NVIDIA. Let's take some of this off the... Sorry about this. So you can see still in an ascending channel. Nothing really wrong here. ADX going down on the pullback. ADX going up on a March higher. This is confirming trend mode. And again, you can see a nice trend forming here. The November 11th day here, 154.82, right? Similar thesis that we've had on all the charts. They really pin price to the Friday before opex. But yeah, this does not have a weekly higher low, and can certainly pull back further into this 140, 130, that general area. If they're doing an entire pullback, could even go to 131, 138. And if they're not doing that, and it's really just from here, you're basically at the level. Let's turn after hours on so that you can get a good, yep, there it is. You're at the level. 152 to 148 is the buy zone. And again, still in this ascending channel, which is, how do we play those? You buy at the bottom, you sell at the top. That's it. You don't look to play in the middle. And you certainly don't look for lower prices until this channel breaks. Right? It's like what happened back here. Here's your ascending channel. You look for higher prices while in this channel. When this channel breaks down and gets back tested, that's when you start looking for lower prices until you've put in a bottom, some form of a bottom. And depending on how you want to measure that, that happened here. Okay. 127 entry, look to add back when it's confirmed. And now you enjoy the ride. We're going to keep throwing the ball around the horn. My favorite, Crocs, continues to march higher. This pattern here that I've talked about for a long time. This left shoulder, head, right shoulder pattern that's in play. This neckline, which has provided supply, at some point will be tested. This $85 range is a stone cold buy if given. Right now, they're not giving it. Right now, they're just going to test these gaps, fill some gaps. And as you can see on the daily, this is trend mode. This is a brand new bull trend. Was below the 200, below all the moving averages, captured the 50, rallied to the 200, pulled back twice. Boom. And look at the moving averages, 200 on the bottom, 50, 20, 10, 5, in that order. And the bands are expanding, which is telling us that volatility is expanding. And when you zoom out to the weekly, above the 50, above all the moving averages on the weekly after being below the 200. Momentum here is telling me that this can continue for a long time. ADX above 30, telling me trend mode. This is my number one stock for the remainder of Q4. Let's take a look at EMPH, another one. Okay, this is a bull flag pattern. Goes up, goes sideways, building energy to potentially come up here to 370, maybe even 400. Momentum curling up. Histogram is still negative, so this is guilty. The bulls are guilty until proven innocent. You zoom into the daily, you definitely have a cup and handle pattern and a very, very clear breakout area, right? We look for things to build bases going sideways and then break out. And when you do that, you have a very clear risk reward scenario. This cup and handle pattern at minimum can hit 458, maximum could hit 580, just based on the bull flag pattern itself. So, it's all it's very subjective. These bull flag, bear flag, cup and handle, these are all very subjective. What I will tell you is momentum remains up. And when you go all the way out to the monthly, momentum PPO was at 56, reset to 17, and just put in a bull cross. And the histogram, which has been negative since April 2021, is now flipping positive. Right? As of October 22nd, it was 0.2, which is positive, and now it's 0.43, and was negative for 10 months before that. So those three stocks are stocks I like a lot. Let's take a look at the energy sector, see if there's anything going on here still. XLE, doing a bit of a broadening formation, in my opinion. This momentum is going straight down now. Has tested the 20 a few times. This is not something that I would like to participate in until it's at this blue line. And this momentum is lower towards zero. So this is the trajectory for probably the next 3 weeks. Again, the same thing that happened here. Right? We're just looking for that to happen again here. Sometime around December 7th, maybe a little bit longer, maybe a little bit shorter, as price pulls back to the 200. And again, if we zoom out here, you can see this isn't a going to infinity pattern or an ascending channel pattern, but it's also a double top. Okay, and the longer she goes sideways here, she's building energy to go up. If she gets rejected here, we're going back to the bottom of the channel. All right, and that would be bottom of the channel on lower momentum. So just something to keep an eye, I'm not really sure this is the place to put your money. And again, if this thing topped, if energy topped in the summer, which is my bet, we should be looking for something like that at minimum. Right? And this is really that ABC structure that you see where the pattern itself does this whole corrective move. There we go. You have an impulse move lower, a corrective move, an ABC, some way to exhaust the momentum, get price back up to where you want new sellers, and another move again. And the market is very symmetrical. And when you do that, you can look at some of the leaders that we've seen in here. Yeah, this is at a sell zone. This is a distribution pattern, and this is the momentum curling down. Energy's coming all the way back down to here. Zero line, maybe even negative. If you look at XLF, We're still in this series of higher lows and higher highs. Have not hit this target here yet. But I will say, certainly could have hit that, you know, so it's very subjective right now. These trend lines are all subjective. This momentum is declining, okay? And this is a problem for the bulls, right? Same thing happened here. It goes sideways, a bull flag pattern fails, and you find a bunch of more sellers. That being said, really just trying to digest the 50. And this looks very, very healthy. New lows, higher lows in momentum, and straight up off the lows is telling me that pullbacks here into the 20 are for buying. 33, 32, anywhere in that range, this little pocket here. And if you look at the leaders in there, you've got JP Morgan, right? This is telling you that new bull market look. You just got to go sideways for a little while. Let the 10, the 20, the 5 get above the 50 and the 200. The histogram will remain positive. PPO will probably come up, do something like this, then do a little bit of a pullback, and then that's what primes the next move. And that's what we're looking to see. So sideways action over here is certainly healthy. Goldman Sachs is another leader, and you can see you're getting this brand new bull market look. Not so much like you had on Crocs, right? Where if you take a look at these moving averages, you can see like this is the brand new look, right? Where you get all the moving averages are like within, you know, what, 1% of each other, 4% of each other. And then they expand apart, right? Volatility expands apart. That's what we're looking to see on these names. But here's, you know, Goldman Sachs, right? Okay, so those are the positives. We'll take a look here real quick at some of the negatives, some of the names I'm avoiding. I'm not touching ARK. This looks awful. I'm not touching Bitcoin. This looks awful. Maybe if she can get down to 14, 13, 12, 7, sure. But not touching, right? Long-term uptrend is broken. So this thing could come all the way back down to 7, rally to 35, and then go to 500 bucks. Again, I'm not predicting any of that. What I'm saying is, you know, until this momentum can start curling a little bit more, like right here, there isn't a lot to do. I will look at another one here, CGC, right? Put in the higher low on the monthly, the higher high on volume, and now looks just to be getting rejected at the 10. This to me had a great look, closed outside the bands on the 7th, and now back inside the bands on more volume than you had back here. So more sellers, again, why are they selling? Because it's a double top. Just like you had the double bottom here, now you have the double top. And if you zoom in, it's not as bad as it looks on the larger time frame. Still in an ascending channel. And as long as she's in this blue box, you can buy the dip 360, 350, that general area. And this thing could have a lot higher to go. More things that I don't like. I don't like bonds. I don't think this is ready yet. What I would need to see this ready is a rally all the way back to 120, then a pullback all the way to 108, and then we can participate. Because look at how bearish this chart is. I mean, it might as well go hit a brand new low relative to the 2004 low. It might as well. Why not go to 80? I mean, look at this momentum just pointed towards the floor. It hasn't curled yet at all. So you're guessing on bonds right here. You're guessing. And it's not somewhere I want to spend my time or money. We'll take a look at IYT. Certainly curling back at the 0 line on the monthly, which is what you need to see. The weekly captured the 20. So the transports are leading. Same, just like Dow Jones Industrial. Leading. So that the Dow theory says, and look, macro downtrend broken. There isn't a downtrend here that hasn't broken. Now look, PPO's extended, needs to reset. What does that mean? Price could come back. You could have yourself a little something like that happen. Come fill this gap. come back down to 324, come back down to the 200, let the 50 come up. Thing needs to go sideways for a while, but she's where she needs to be in order for price to move higher. And so that's definitely very, very important if you're looking at equities. Gold can't get moving. Can't get moving. Weekly reversal. Again, this is the look you need to see, but we don't have a divergence, and ADX is not confirming trend. So she broke one of these trends. She broke the going to zero pattern. Now we need to set up that higher low and have a channel to trade. Right now, this is still in a void. But again, pull back down here to 159, pull back to 155. You can start to look for entries that could potentially mark a higher low. TNX closed 2 weeks below the 10, PPO bear cross on the weekly. Daily, back to the zero line, but still below the 50. This is a trend lower look. This broken going to infinity pattern, it broke. You can also probably look at something like that, right? So we're in this now channel that's going to get us back to here by December 9th. And until and that's what will be the other side of that TLT chart that we just looked at. So again, as the 10-year Treasury pulls back on the weekly towards this 330 level, 350 level, that general area, that's where we'll look to find demand. And again, that will be the cause for TLT doing this rally and then that rally ending. And that rally could end right here at the 20. So that's about it. I'm going to take a look at some of these relative strength reports. So this is IWM versus SPY. SPY's basically winning. IWM versus QQQ. Qs were winning. SMH is definitely making a huge, I said Qs are winning. IWM was winning, but could be rejected here at the 200. We'll have to see how that plays out. SMH is making huge pullbacks in this ratio. SPY versus gold, still telling you to favor SPY. SPY versus bonds, still telling you to favor equities. SPY versus commodities, less clear, but since that June low, you have equities being favored. And XLE is the equity to play relative to the commodity basket. And to take a look at that basket real quick before we end this video, this is a distribution pattern, right? All within these two candles where all the volume came in, right? Right here and right here. Price has been stuck between there. This is a distribution pattern. When she gets below 23, that's when the floodgates will open. And honestly, this gap down here is in play. We'll take a look at a few more charts that we've got down here. Fund managers positioning in November, all cash. All cash. No one's in equities. Yeah, I like this one a lot. If you look at when things started to top, bonds topped first, then the crappiest of equities topped, and then real estate may have topped. So we'll see how that one plays out. If commodities topped this June, we could add that down here. And what that then tends to imply is a period of underperformance for all assets, followed by bonds outperforming, and then equities outperforming, and then commodities outperforming again. And so that's how this tends to work. The cycle will top, bonds top first, then the crappiest equities top, then the best equities top, then commodities and real estate top. Transports relative to utilities have broken above resistance. So again, this is telling us risk on equities. Rarely seen rapid 12-day rate of change in the semiconductors. Again, this has only happened a few times, and it's led to large bull markets. Did have equity put call ratio at its highest since great financial crisis this past week. Again, I don't know what to say or think about this, but again, it's telling me that there's extreme fear. But at the same time, total volume was at its lowest. Equity call put volume was at its lowest. Trend continues to spike high, which is indicative of selling. And dollar is inversely correlated with everything. So we have to watch the dollar, watch for it to collapse. Last week we covered the dollar. There is a monthly bearish Harami reversal candle. I do see the dollar rallying to 109 and then a collapse from there. So that's all I got. I hope you like the content. If you do, hit the like button, subscribe to the channel. We'll see you next week.